Hello friends, this is Raj Sastri from Raj Option Trading. Today is February 15, 2022. Let's do a quick market update, look at top ETFs by volume, and then let's look at beaten down stocks with sales growth more than 20% and net margin more than 10%. These are profitable companies. So with that, let's jump in and get started. Look, from a market perspective, we have market in up down type here. It came down big time, went higher, came down again, went higher. Now it came down. Now this it's making a leg higher, but it's nothing different. It's going to be turbulent as you go forward. It's driven by Fed, and as you know, that's why I don't trust this rally today. As you can see here, futures are pointing to a little bit down as of now. So market might do some more yo-yo, go up and down. So on the top, we got 3 month chart here. It's a 3 month 1 day. And look, this is Dow Jones Industrial Average. And then you got S&P 500, similar pattern here, going down, going up again nicely, coming down big time. So that's it's going to continue for some more time. So I think we should get used to this up down market. Mainly it's driven by Fed. So let's see how it's going, and also tensions in Ukraine and Russia. And Nasdaq is a little more weaker, as you can see here. It's also trying to go higher, but you can see here it's also down in the futures market. So you can expect probably a downtick tomorrow after a nice huge rally today. And same story, Russell is also a little more weaker, as you can see here. It's trying to make some higher highs, as you can see here, but still it's weak. And then we got 5 year chart here. Look, on a 5 year chart, we are still in a nice uptrend, as you can see here. Any small blips here, they're all great buying opportunity. Looking back from where we are now. So that's why, if you're a long-term stock buyer, long-term investor, don't worry, keep buying these dips. You'll do great. Look, we have COVID, and we got 2018 dip here. So all these are buying opportunities. So I think we should buy slowly and don't get into margin trap. So that's the way to grow your portfolio. Look, S&P 500 also very impressive in a 5 year weekly basis. And look, Nasdaq is really doing great. It's a great buying opportunity at this time here. And we got Russell 2000. As you can see here, it's a little bit of weaker of the ETFs here, but still doing great. So by looking at the long-term perspective, you will be buying these dips here. But if you just look at a short-term chart, you will be scared and you will not buy anything. That's not the way to go. So with that, let's jump in and look at few ETFs. All right. So let's look at first. Let's look at beaten down ETFs, and then we'll look at stocks. From a beaten down ETF perspective, look, top of the list here we got S&P 500. Look, S&P 500 today it made a little bit higher, as you can see here, up 1.6%, but it's been down for a while, as you see here. 1 day, 5 day, 10 day, 1 month, S&P 500 down even for 3 months, and it's down 7.1% year to date. Sorry, in 1 year time frame, or from 52-week high, it's down 7.1%. So that's why S&P 500 is still not in the correction territory. Look, RSI 40 tells you stock is sold off here. IV percentile is 77. That tells you even up here, it's volatile. That's why you see a high IV percentile. And if you have a good portfolio, you could sell some put options way underneath and make some money that way. It's a good strategy in this type of market. And look what's going on here. We got TQQQ. It's a ultra pro QQQ, meaning it's a triple X leverage on the bull side of the house. When S&P 500 went 1.6%, TQQQ did almost 3% higher. So a lot of people are buying these leveraged 3x bull ETF, so that way they can make some good money, take advantage of small pop in QQQ, as you can see at 2.5%, and TQQQ goes up 3 times higher. So that's why folks are attracted to TQQQ, which is a leveraged bull ETF, 3x off of QQQ. And look, we got folks are also buying the short, ultra short here on the QQQ side. Market went higher, and ultra short 3x QQQ came down big time. So people are taking advantage of this here and buying some TQQQ. So that way, when the market tanks tomorrow, you can make some money that way. Similarly, folks are buying UVXY. It's a ultra VIX short here. People are buying VIX UVXY because it's down, as you can see here, because market went up. Ultra UX came down. So that's why folks buy this. Tomorrow, if the market tanks, UVXY can go higher as volatility surges. That's what's going on here. Nice volume, as you can see here, for UVXY. And then we got SOX here. It's a semiconductor short here. As you see here, SOX is also done big time. So people are taking advantage because semiconductor went higher. SOXS came down. So folks are buying this, taking advantage. In case semiconductor crashes tomorrow, comes down, you can make some big money. That's what's going on here. You can see folks are basically hedging on both sides. On a great day, folks buy short ETFs and also buy some long ETFs to make some money in a very short time. So with that, pay attention to RSI and IV percentile. As you can see here, whenever the RSI is low, IV percentile is high, you could take advantage and sell some put option way underneath the stock price, make some money that way. So with that, let's jump in and look at the stocks. So from a stock perspective, what we'll be doing is we'll be looking at beaten down stocks with the high volume and also nice sales growth. Look, sales growth here is nice. It's as you can see here, sales growth is very nice here. These are more than 20% sales growth. So with that, let's jump in and look at some of these names here. Keep watching sales growth here, 1 year sales growth, nice and high. And keep watching net margin positive. All these companies have got double-digit net margin. Companies are literally coining, minting money here. And look at the cash. All these companies have got nice cash cushion. We don't need to worry. And look at the overall score. Most of these companies have got nice overall score, so we don't need to worry. And Altman Z score, which identifies financial stability, is also very, very high. Probably with the exception of MT here, which is a steel company. All other companies have got nice and high Altman Z score here. With a few of them don't have any score, but I think those are good companies. Qualcomm is a good one. So with that, let's jump in here. Look, top of the list we got AMD. AMD is a great semiconductor play here. Chips, artificial intelligence, data center. Look, it's been beaten down big time. RSI is 41. It's down in 5-day and 1 month and even 3 months. So it's a great time to buy some AMD here and go from there. And then you got NVDA. NVDA is a great stock. They're into artificial intelligence, data center, something similar to AMD, but in a bigger magnitude. As you can see here, market cap is $662 billion. This can be a $1 trillion market cap company pretty soon. So that's why it's a good one to buy. Look at the growth here. Sales growth is very nice here, 46%, and net margin is 34%, much higher than AMD here. So you could buy NVIDIA here. Look, RSI is 45, still cheap, and price to sales ratio for NVIDIA is a little bit high. That comes with the territory. Great company like NVIDIA sells little expensive from a price to sales multiple perspective. Look, it's down in 3-month time frame here, but it's done great. It's got nice free cash flow. And look, in a 5-year time frame, NVIDIA has done great. And also in 1 year also they've done great. 6 months it's positive. So it's a bullish company. And next is one of my favorite. I've been accumulating slowly. It's a Meta or Facebook, completely sold off with the RSI 25. I can't imagine Meta has got so low RSI here. It's a great one to buy. Look, it's slowly turning around. Today it went higher. So it's a good one to slowly accumulate at these levels here. Then you got Pfizer. Pfizer has been doing great last year. Look, it's down as of now. It's a good time to buy some Pfizer. Very good quality company here. Down for 1 month, as you can see here. Great overall score. Look at the cash balance, $29 billion cash. That's a great cash cushion here. And then you got a few more. You could buy Microsoft. It's a great company. Satya Nadella is leading the company nicely here. Look, RSI 41 tells the stock is sold off here. You could buy some Microsoft. They're planning to buy Activision Blizzard. That could be good as it tries to make its foray more into gaming. Then you got Tesla. Tesla is one of my favorite. Look, it's a nice performance. It's got about 1542% in a 5 year, but it's struggling in 1 year, just 13% higher, as you can see here. Nice $17 billion cash in their balance sheet and a free cash flow positive, and nice overall score of 69 here. So I would be buying Tesla at these levels and accumulate. And then you got Moderna. Moderna is not just a COVID stock. They also have a lot of oncology indications and pipeline candidates in their pipeline here. Stock is sold off here. I think it's a great one to buy at these levels here and go from there. Look, they got about $8 billion cash. And it's a free cash flow positive company. $11 billion free cash on a trailing 12-month basis. Nice overall score of 95. And next is one of my favorite here, Pinterest. Pinterest is a great stock, completely beaten down, as you can see here. RSI 34 tells it's sold off completely. They got about $2 billion cash and free cash flow positive, as you can see here. Net margin positive, 12% net margin. It's a great one to buy here. And then you got a few more, as you see here. I love Qualcomm. They got a great hand when it comes to mobile devices and also into 5G. It's a good one to buy here. And Applied Material is a great company here. It's a beaten down. Look, RSI 40. Applied Material has got a nice $5 billion cash. You could buy this company also. And then we got Starbucks. It had its fair share of challenges with the union workers, and that's why stock is sold off here. RSI is 34 tells you stock is sold off here, and you could buy this company. Only issue with the Starbucks is quick ratio is 0.6. That tells you they don't have too much liquid cash in their balance sheet. I love to see a little more liquid cash, maybe quick ratio above 1. This one is struggling a little bit right now. And I love Texas Instruments. You could close your eyes and buy Texas Instruments and sleep peacefully at night. It's a low volatility stock. It always does very well. And we got Abbott Labs, one of my favorites. You could buy this company also. It's a great company. Look, RSI 37 tells the stock is sold off here. And then you got FNF Fidelity. It's completely down today, as you can see here. It's a good one to buy here. Quality stock. I think it's got a nice $35 billion cash. That's a huge cash load here. And in a 5 year, they've done great. So you could buy some FNF here. Nice and low RSI. Tells the stock is sold off here. Last but not least, Adobe is a great stock under $500. Right now it's $479. It's a great buy here. I'd be buying some Adobe and position yourself for a nice bounce, as Shantanu Narayanan always delivers on the quarterly results. So with that, thank you very much. Happy investing and trading. Please subscribe.